Thanks for checking in the Pivoting to Web3 podcast. Go to pivotingtoweb3podcast.com to download and listen, or Web3 Game Plan to check out the videos. Thank you. Morning, good afternoon, good evening. Welcome, welcome, welcome. Welcome to Pivoting to Web3. And today we have Adrian Mendoza. And Adrian Mendoza is the general partner at Mendoza Ventures, which is both Latinx and women-owned at the first Latinx-founded venture capital fund on the East Coast, and he's in Boston. And 20 years experience. Now, I'm not going to go too far because he does too much on the fintech side. He's in AI. He knows about cybersecurity. He knows about bootstrapping. He knows about capital ventures. He knows so much, and he's been around so long. I'm just excited to have someone that is esteemed as Mendoza at Mendoza Ventures. So I'm going to turn it over to you, and you can give us some insight on how you ended up in Boston, Massachusetts, and being so successful, because you are a star. And I just want to let everybody know about you, and glad that you had time to be on my podcast. So, Mendoza, say hello to your audience and ours.
Hey everybody, Donna, thank you so much. I'm so glad that we matched up in terms of being a guest. I love what you're doing in your podcast. I love you sort of doing the education about what's going on in sort of the Web3 world. And I'll kind of start a little bit about my background is before I was in venture capital, before I was an investor, I was a founder. And I started our first company in 2010,
Oh,
really, really early on, right after the great financial crisis. And we ended up raising venture capital money. We were focused on testing mobile websites and we had customers. It became an ad tech. But in the middle of it, like every founder, we had to find a way of paying the bills. And so this is what you'll hear the word called bootstrapped. It's finding ways while we're building, the company and the product. And one of the first projects I did for this company is we built the first mobile app that was approved by the regulators. And it was for a really well-known insurance company. And it was a really cool idea where there was an insurance company that was selling retirement plans and said, "Hey, we'd love to find a way of interacting with the real world." So what we ended up doing is designing a mobile app where you would walk around and it was saying, "Hey, why don't I give you a price scanner and
hmm.
you walk around stores and scan every product you want, and we'll tell you where the best cost savings are. And by
Wow.
the way, if you do find some cost savings, you know you were going to pay $500 for that TV.
Hmm.
What if I find it to you for $450? Why don't you take that $50 and put it into your retirement account?" And it was really an amazing because it was kind of very much that first inkling of what Web3 can do is this interaction between technology and everyday individuals. And we really thought hard about how would we interact with the basic consumer to be able to do more education. Roll the clock mid 2015, the company became an ad tech, so we were now targeting ads towards people with iPhones and Android users. And in 2016, my wife and I started Mendoza Ventures. We had raised VC money. We knew we were founders. We knew all the service providers. We knew all the investors, and we said, let's take a crack at actually investing in companies. And the first fund was just us, and we invested in three companies. And we were like literally said, hey, what are the best spaces that we know? Well, built AI, we built cybersecurity, we were building these financial technologies for the banks. Let's do one of each. So the first investment was an AI company. The second one was a cybersecurity company, and the third one was a fintech. Lo and behold, the cybersecurity company, we sold it in 5 months and it returned 10x back to us.
Wow.
And we were like, wow, there's something incredible here. And it was two Latino founders out of Boston. They came out of South Texas.
Hmm.
They sold their company. We actually ran off with their mascot, which is this little plush dog that's here. He now works for us. And the first AI company just sold earlier this year. And so we've got one fintech left, and it happens to be a blockchain company. And so we are early investors in blockchain. This is circa 2017, 2018. And we're now finally getting to the point where we're going to see like revenue come through it. But we really saw that investing there was some short-term benefits, but there was also in these spaces this really, really long-term like outlook on life. But it also in that Web3 space, I mean, Web3 wasn't really a term until like the last 3 to 4 years when
Mm-hmm.
we were trying to figure out how do you take all these different pieces and put them under a bigger umbrella. And it happens to be now sort of, AI is into it and, e-commerce is into it and, blockchain is into it, fintech is into it. And it's been really kind of an interesting ride to see all of this develop in the last 8 years. So Mendoza Ventures has been around for 8 years. We're on our third fund now, and we literally allow individuals to invest as well as we're anchored by Bank of America, Truist, and Grasshopper Bank. Some of the largest banks in the country are investors with us.
Well, that's exciting. And you've had a very exciting journey in the fintech and just making money space. Okay. The entrepreneurial space, the capital ventures, you and your wife have done really, really well. So with that said, you're now in the space of fintech. You've got these great banks, but there seems to be a lot of confusion with consumers or the public and early adoption on exactly what are some of the benefits that changes or impacts society that we really should be aware of instead of being fearful and confused. Can you help us understand, some of the benefits and why it's taking off and why it was so successful?
Yeah, I mean, I'll use a good term like the blockchain. The issue there is when it first came out, everybody was talking about it. But no one really understood that it was really infrastructure. It was like talking about a road. You're like, man, how that road paving is fantastic. That's really what it is. It's infrastructure. And I remember early on, like people had always asked me, like, hey, did you ever buy any cryptocurrencies? Did you ever buy any blockchain or Ethereum? And I remember having early conversations, like, when I was a founder pre 2015 before everybody knew about it, and someone would come up to me and were like, "Hey man, you want to buy some Bitcoin?" And I would be like, "Oh, what are we buying drugs here or what?" He goes, "Yeah, there's a guy in a van who if you give him $1,000, he'll give you Bitcoin on this little card." And I was like, "Yeah, this sounds really sketchy." And then sort of in mid 2016, I remember this is a good Boston one. There ended up becoming like Bitcoin ATM machines. Like there was one in South Station in the big train
Mhm.
station in Boston. But it was like people were just like averse to it, even to the point that I was on a panel and someone was like, "Oh, I just bought some blockchain." And I was like, "I think you mean Bitcoin." And so there was always this confusion, and this actually happens a lot in the advent of
Mhm.
new technologies, where people are so excited about a technology that it all of a sudden comes up into the lexicon of what everybody's talking about, but they don't know what to do with it. And so early on, like 2015, 2016, there was kind of this boom and bust cycle of everybody was talking about it. Next thing you know, I'm being approached by like the country of Jamaica who's going to do a blockchain network. And I was like, wait, what? Other countries and rights management for images and music, and nothing ever really stuck. And it's hard because when you're offering new technology, like let's say like a database, like no one's going to
Mhm.
buy something because of the database you use. It's just the road you drive on. It's the technology, the underpinnings on it. And there was so much value there. I always described blockchain as imagine if I gave you $1 and you knew exactly where the dollar went and who gave it, where you gave that dollar to, and what it was used to buy, down to the point of where it was destroyed to the point of when it was
Mhm.
printed, and you had this ledger of everything. And so for the last really 5 or 6 years, we've been really looking for these beautiful use cases. I remember in between starting Mendoza Ventures and finishing my company, I was the entrepreneur residence at John Hancock's Innovation Lab. And we built an early prototype of blockchain. And everyone would look at us and say, well, why aren't you just using a database? And I was like, no, that's not the point. Like, you don't have to use paper anymore. Like, I can track when a customer signed in until when we gave them a product and how much money has been transacted. And so we're really to the point where cryptocurrency has really gotten that in front of people. But I think we're going to see, and this is really the power of what Web3, one of the components that we are massive believers in Web3 is what's called DeFi, decentralized finance. So one of the, a couple of years ago, I was quoted as saying that the power of Web3 and decentralized finance
Uh-huh.
is that traditional players, the MasterCards, the Visas, the card players, would get disrupted because you now had the ability to move money around from one place with the other without having to deal with FX rates, the cost of international capital. And so you saw early on people like JP Morgan built their own coin, the JPM coin, to move money from one office to the other to not have to pay international fees. So you have this fantastic use case that's out there. And in that quote, funny enough, one of the traditional players, which is a company called Synapse, actually ended up taking my quote and using it in their marketing. And I was like, hey man, I didn't allow you to have it. You're the point. You're the traditional player.
Mm-hmm.
And what they were doing is they were building a general ledger that allowed fintechs and companies to move money around. Well, it just so happened a couple of months ago, they went out of business. And
Mm.
so there is this massive opportunity for startups and founders to start looking at how do they bite into that using some of these Web3 technologies, decentralized finance, AI, to help move money around. For me, I remember I was telling this story just yesterday. I was telling someone about 2000. In 2000,
Mm-hmm.
I was I was at IBM's innovation lab, and they were working on a project for the state, and it was about something ridiculous. It was like 200 pages. They were all hard coded. There was no database. There was just one engineer, and
Mm-hmm.
then someone was like, "Oh, you forgot 10 things," and he goes, "Oh, there he goes back. He has to change all 200 pages." Um, so when you get these advent of these technologies that are the underpinnings, they make things
Mm-hmm.
easier. And so I think what's going to happen as we go more and more farther out into sort of these old technologies are being disrupted, the ability to create ideas and companies with the building blocks, these building blocks of life of building companies are going to be out there already. So, which is what I love is because you have the ability with DeFi to move money, move currencies. Now we've seen remittances happening between US and Mexico. Now we see, I remember us having a conversation 6 years ago of how would I become a bank? Well, I need a banking license. And then after lunch, we were like, well, what if we had, puppy coin? And puppy coin, I exchanged it money for puppy coin. And now I could lend puppy coin and someone can sell it on the other side. Could I inherently be a bank? That is decentralized finance at its finest. And so what I love is that it's not just about these cool technologies. The power of what Web3 is happening is how do I use them to build websites? We're at the infancy of like what 1998 was, 2000, where we're starting to be able to now build our own websites. We're starting to now create our own stores. And, in the next 1 to 2 years, we should be able to build our own fintechs by using these Web3 technologies.
Wow, that is exciting. So let me ask you this. On that same plane, there are underprivileged populations and locations and places and spaces where this could really be a benefit in the ecosystem, and then they could start a bank and they can really how would that impact something on a smaller scale?
Yeah,
That
I
question
think,
has come up so that can paint a picture beyond the big guys that are centralized now, um, getting uncentralized. How does it impact the smaller player in society or
that's
those
a
that are
great question.
underprivileged?
Well, the great thing is the reason that I know this really, well, I'll get to the answer is we invest a lot in fintech that focuses on underrepresented communities. How do we leverage some of these Web3 technologies to help communities that are underbanked, that
Mhm.
are also, because we're, for most of us on this call, we're the overbanked. Every day we go to we go to the mailbox and there's three ads from three banks, and we go to our email and there's Chase and Bank of America, and everyone's trying to win our bank accounts, but you get a portion of the community. I'll use African American, Latino, immigrants that are not being touched because they don't have a credit rating. They're credit invisible. And we're investors in a company called Listo that's a marketplace to offer them lending, insurance products. We're now talking to a few other individuals and new companies that are starting to use decentralized finance across remittances. How do I send money from US to Mexico? But if you think about it right now, what happens, you have payday loans, you have all of these loan providers, remittances that are using the cost of capital is really expensive. So we're charging them, 24, 30% to send money back home. The money that goes back home goes to pay bills, it goes to pay medical bills, it goes to pay rent in their
Right.
home country. And what if you remove that cost of capital to the point that it's zero? If JP Morgan can do it, why not be able to use small startups to lend money from one place to the other? Not just remittances, but what if you're able to lend dollars between one person and the other using decentralized finance, using blockchain, using tokenization of not really using cryptocurrencies, but like
Mhm.
puppy coin. That allows me to lend without the massive amounts of fees, which are predatory right now. And so I think we're just starting to open that Pandora's box of right now, the big guys are using it, but we're starting to see sort of in the middle, and it's going to start trickling down to a founder can start a company and say, hey, how do I let undocumented workers send money home, undocumented workers lend to a friend without so much of the cost of capital? That's really a big issue right now. As interest
Mhm.
rates go up higher, the cost of lending money gets more and more expensive. And funny enough, the cost of lending a lot of money, 200, 300 million, is less than the cost of lending 10, 20, 100, $200, which is you think it would be the inverse, but it's bigger in volume.
Wow. That's really interesting, but I'm going to go down this lane just a little bit further. So,
No, let's do it.
in those populations, in a lot of areas of the world, they don't have identity, or they may be even in the Western Hemisphere without identity. So, how does the banking, there's fintech overseas and probably here as well, but how does fintech help those that don't have identity as well? I've had some questions come through regarding that. Could you explain that to us too? That's all in that same space with fintech and DeFi and everything.
Yeah, this is where the AI component comes in. We're an investor in a company that does this just exact same thing because one of the things they realized was that um, identity is such an ethereal term now. Usually in traditional financial institutions, identity
Hmm.
meant our FICO score, an Equifax score. Well, what ends up happening is people have now been committing fraud using your name, my social security number, my other address. It passes through all the fact checks. It's what's called KYC, know your customer. And then it's being used to launder money. It's being used to fund, the war in Ukraine. It's being used to do all the bad things. Well, we've got to really rethink what is identity.
Hmm.
And because, we all think my identity is the FICO score. It's not. It's who I am, my behaviors, my name, my social security number. Do I have a plush dog or not? And so you have to start framing like using AI algorithms to be ahead of the guys that are committing fraud. I remember talking to another investor who just scared the pants out of me. Like this was like 8 years ago.
Hmm.
And he said, hey, we were the victims of wire transfer fraud. And I was like, how did it happen? Like, how do you send the money to the wrong person? And he was like, let me tell you the ways. By the time I was done, I was just freaked out. And he was telling me these stories of, oh, yeah, people are mining your email. People are seeing when the CEO is on a plane realizing he doesn't have email. So they'll build social engineering to go back and say, hey, I need $5 million to be sent here before I land. And the CFO is like, oh, okay, great. Let me send it. And then the guy sends in and goes, hey, why'd you send $5 million? And there's this whole like fake email things that are done. And so
Hmm.
this had happened to this investor. And so they started going back and tracing the money. and they were in mainland China. And he was like, I'm seeing the factories where there's people just like laundering money and doing all of this stuff. He's like, it didn't become real until I saw it. He's like, we were able to recover three-quarters of the dollars, but
Hmm.
a quarter was already spread out into the ether. And so that really got us looking into like, okay, and this was kind of that seed was, how does cybersecurity play into the movement of money? Because as soon as you start moving money easily between tokens, there's an opportunity of people using it to launder money. There's a people using it to like create fraud. And so what's different than any time below, any time that's ever happened, is all of these technologies have to be integrated. If you don't have cybersecurity, you're going to end up having fraud in identity. If you don't have AI algorithms that are checking your cybersecurity, like it's all this trifecta and checks and balances that is actually continuously changing, because there's always somebody that is trying to create fraud using our identity. And for the longest time, I've been talking to startups and they've been like, hey, one day we're going to have a global identity. And I'm like, man, I could barely go to the DMV right now and get like a new, like, though I agree with it, it's not going to happen anytime soon, because there's still a lot of people that don't have a driver's license, that are in this country and barely have an ID. So how do we start creating things, especially for individuals that are underbanked, and like a score on using alternative data sets, not just like, are you paying rent? Are you like, how much do you get paid a month? And beginning to look very differently, because in the traditional world of credit scores, all we're seeing is like, your social security number. And then when you go to apply for a loan, all we're looking at is debt to income ratio. How much do you owe? How much money do you make? And not really like, how much are you making? Like, have you been good at paying off loans? And that's where I think we're
Hmm.
starting to see this emergence in this Web3 wave of just combining all of these disparate things, these things that have been little pieces of the puzzle, to make this big cohesive puzzle that's going to help everybody.
Wow, that was a lot. So you have your entrepreneurs, your brands, consultants, solopreneurs. What do you recommend? What are the top 3 or 5 recommendations for someone going forward in today's new world, especially if they got to look at AI, cybersecurity, Web3, decentralization? You've seen it from both sides, from the bootstrapping to the venture capitalists. How do you recommend those that are listening? What do they do? How do they get started? How do they assess their needs? What do you suggest?
Yeah, I think it's more than any time before. It's about education. It's about listening to incredible podcasts like this, talking, hearing these the guests that you have, it's just being like, more than any time before. It's the education aspect is so much easier than when I was a founder. When I was a founder, yes, the internet was around already, but there wasn't this much dissemination of content. There wasn't like, man, I want to learn about DeFi from Donna. Let me just listen to her next 10 episodes. You had to do events. You had to go out and meet people. You had to go and talk to other individuals. It was really, there was definitely a lot more of a harder, like, hill to get over.
Hmm.
Nowadays, it's interesting because I've had these conversations with people on the Northeast about, a lot of our events have disappeared and they become virtual. They become other ways of getting, podcasts. The events will come back, but I like what's happened post COVID is that there's this next generation of founders and investors and people like yourself that are out educating and telling stories, to just be able to, because like right now, like now you can go into anything on Google and search for a term and just go down the rabbit hole. And it's funny because one of the things I always encourage to our team, to not just our founders, but our investment team, is what one of my investors, Adam, calls going into the swirl. And he says, hey, every day I go into the swirl. I just get in there. I'm reading, I'm on LinkedIn. And he's just all about like just learning and making connections. Like every morning, I'm reading 2 or 3 newsletters. I do the same thing. I go in this world, I give myself the time to just follow down a path and say, hey, today I'm going to learn about this. I mean, I'll tell you, a couple of years ago, there was a founder who was like, hey, I think there's an opportunity on using a different type of PC chip for mining crypto. And I went down the rabbit hole to the point that like 3 months later, I was talking to the guys who were designing chips at Intel. And they were like, hey, they were like, oh, you want to talk about it? Let's geek out. And it just allowed me to just go down the rabbit hole. We never did anything with it because then crypto crashed, but it was a great exercise of just being in this world and just learning. And this is the best part about being a founder is everybody knows your struggles. Everybody knows that you're building something and get a community and resources around you to just go down the rabbit hole. Give yourself the time um, to be able to just learn and just be able to immerse yourself in a topic. Because even the thing with what's different with fintech and AI, especially more on like the financial technology side,
Hmm.
you're dealing with things that are like really down the rabbit hole. Like the reason that we started investing in that space was we had, gone through technology through regulators before. We'd gone through legal. I had helped banks like TIA build some of their mobile apps, and I was the one talking to the lawyers. I was the one they were like, no, you can't do this. And I'm like, hey, what if we tried it this other way? And they're like, yeah, you're kind of right. Yeah, that works. And so, but that was that experience of in a world that you look in, you see these blockers. And we were like, hey, let's find a way around, but we have to know enough to be dangerous, but we also have to know what is their pain points. And
Yeah.
that's really the great thing that I think that's where there's a massive opportunity in these spaces to find pain points that you know of. I always encourage founders that if they're like, hey, I want to disrupt this part of banking, I'm like, spend 1 or 2 years in that space. Immerse yourself. Go work for a company that does this. See it from the inside. And then once you know from the inside and you know what the problems are and you know who to talk to and you know who's the guys that are making the decision, then step back and create your idea.
Hmm.
Because this morning I was on a call with our blockchain company, and they were actually working for a large bank. I met them in 2018, and they came up with this idea, and the bank was like, "Yeah, we're never going to do that." And it was really about creating a marketplace to sell certain securities between the U.S. and the UK. And it was funny because it took them to one get out of the safety net, but it was a long journey. But now we're getting to the conclusion where we will have one of the first regulated networks from the SEC to be able to sell these and trade these securities. But it really took them for them to be in the inside,
Hmm.
find that problem, and then be like, I think there's something here. I mean, and that's the portion of any founder that find the solution, find the problem, but focus on the problem and make sure that your solution actually fixes that problem. And
You
it
are
sounds so basic, but it's the plight of the founder.
sorry, but I didn't mean to interrupt right there, but you really walked right into my next question, right into it. There's all this confusion with the governance. And, Europe is ahead of the United States. United States is taking too long or not doing anything. They're seeing things as securities. And can you kind of clean that up for us just a little bit on the governance issues, especially here in the United States, in comparison to the other countries being a little bit more forward thinking with the securities and the compliance and the SEC and Coinbase and just all of that banking stuff. Is that a something? Do you mind giving some
Yeah.
insight on some clarity? Because people don't know what to do. They're like, well, I got some crypto in Coinbase. I kept it there, but I don't know if they're going to turn this into this. So maybe I need to go to a hard wallet but no, I didn't do that yet. So let me just chance it. But then some people are rolling everything out, and those that are starting businesses and founders, they starting off overseas. They're not even going to continue to stay doing business in the United States. We're losing a lot of founders, I hear. Can you clear that up? Do you mind?
Yeah. I mean, it's interesting because you look at what's happening in Europe. Europe has had, governance on identity for the last 3, 4 years, the whole GDPR thing. And in that case, the issue there is like, all right, an identity is a customer, an identity is an employee. So that employee customer inherently owns their data. So when they leave, you have to remove them entirely. Well, it's kind of interesting because if you think about blockchain, the whole point of blockchain is that it's a connection, an immutable ledger of every transaction that happens.
Mm-hmm.
So how do I just chop it off to say, oh, this person's gone, let's remove that ledger entirely? That's where sort of the hard part is. But at the same time, what's happening in the UK, what's happening in Australia, what's happening in Europe, there's been this bigger push on regulating, cryptocurrencies, regulating DeFi technologies. Because if you look at what's been happening in the US, 10 to 15 years ago, gains and losses for cryptocurrencies were not reported as taxes. There was people that made millions that never paid taxes on them selling Bitcoin
Mm.
because it didn't exist. It was really until recently, I would say about 5, 6 years ago, the SEC created a sandbox for individuals to ask questions. Because prior to that, they were just suing everybody. Hey, I started a crypto exchange. Oh, we're going to sue you. And they're like, why? I have no idea, but we don't know what you're doing. And we're really like, fearful of what's happening. And it was funny because a couple of months ago, I was watching a show on Netflix about a Canadian exchange that like dissipated. And we were just talking about everything that happened with like some of the exchanges that happened here, the INXs of the world and all that. And I was like, do you know that story of that exchange is exactly what happened with that other exchange here in the US, but just nobody learned about it because there was no
Mm-hmm.
regulations around it. Finally now, you're starting to see the regulators wake up. We've got, because so many people lost so much money in the last couple of years. And had been such a boom in crypto a couple of years ago where everybody was buying crypto, including the mailman. The mailman was telling me, hey, which currency should I buy? And I'm like, hey man, that's your decision. And it's been interesting because I think it's much needed here in the US. I think where we have always been much more laggers in like,
Mm-hmm.
in what's happening on that front, because I think there's been, just politically charged whether or not you bring in regulation, whether or not you're charging, for transaction. And I think we're just at the infancies in the US. The hard part is, when the hammer comes down, it'll come down all at once. But I think in between then, I think there's this big gray area to build companies and build technologies and also build things that are standards that don't exist. Versus in Europe and Australia and other parts of the country, you're much more forward in regulations. You're just much more forward in the use of technologies. And it's hard to wiggle around and create a standard because there's so much like blockers and gates, which is again a good thing. But I think the better thing is the fact that we have that flexibility, but we always have to be mindful of when regulations will come down. It's why things like the cannabis industry has always sort of, been in this gray zone because none of the financial institutions wanted to take their capital because they didn't know at any moment in time regulations would come down to make it illegal and the bank would be sitting on capital that was illegal.
Mm-hmm.
And so it's been really an interesting 5 to 10 years of watching this sort of boom and bust cycle. I think we're kind of in on the next boom cycle with some of this technology, but there'll always be a correction when you bring in, because if you think about it, the giving of advice in the United States is regulated. You can't, go to a robo advisor to tell you what you're going to make. That's all regulated by advisors. That's why we have certified financial planners and, registered investment advisors. That's why, there's a checks and balances when you buy a mutual fund or an ETF or when you trade on the open securities. Um, and so it's kind of interesting because we have things that are fully regulated and we have things that are completely still not regulated at all.
Well, that helps clear a few things up. So, what is before we close, with everything that you have learned I usually like to know, and the audience likes to know, what do you think we need to keep our eyes on or our eyebrows raised at? Or what are you a little bit suspect to or have some concerns about or maybe a fear about happening? And then what are the bright spots? What's on your wish list?
Yeah. It's interesting because when you have been in tech long enough, you see these,
Mhm.
boom and bust cycles. So I was on CNBC a couple of months ago and they were asking me about AI. And I was like, I was at the first hype cycle. I was the AI of everything. We're on a second hype cycle. And yes, once the hype goes down, then we're going to see the advent of interesting technologies. I always joke about the one pitch deck I saw last year, which was like AI for putting pizzas. And I was like, literally, it was a deck of pizzas and pepperonis. And oh, we're using computer vision and AI on cameras to see whether or not there's enough pepperonis on this pizza. And I'm like, it's a 15-cent pepperoni. Who cares? And so that's where things get caught up in the hype cycle. The hey, if I put in AI, it'll,
Mhm.
I may be able to raise more money. I think we're starting to sort of be mid hype cycle, but we're also starting to see a lot more things where financial institutions, banks, credit unions, small minority depository accounts, you know, minority-owned banks, which are the MDIs, them starting to come to individuals like ourselves, having these conversations about how do I use this technology? How do I use AI? How do I use cybersecurity? What fintech should I be doing on? That's what I love because that's where all of a sudden you have this next local bank. This is about thinking globally but acting locally.
Mhm.
You have these local institutions that are starting to going to use AI. They're starting to use fintech. They're starting to use, if you think about like something we take for granted now, like mobile check capture. That didn't roll out to Bank of America or Chase first. That went to small local community banks first. And then they tried it. And then that was successful. And then the big guys ended up using it next. And so I think we're kind of just starting to be there where you're seeing these opportunities of using some of these financial institutions, using Web3 technologies and DeFi technologies and AI and blockchain that I think will start creating standards. And I think we always look at other parts of the country, whether it be Africa or LATAM. But I think what's harder there is because there are no regulations. So it becomes the wild, wild west. Um, but when you sort of find a way of weaving them into very regulated environments, whether it be technology or services or
Mm.
ideas, that's when they have a sticking point. That's when they're sticky. When you can see these long-term, people that 5 years before would not be, talking about AI are now like, we should be talking about this. We should be using this to help our customers underwrite for the next loan, help, underrepresented customers, offer them health insurance. How do we use a non-FICO score? All of that, I think, is going to be sort of our fintech for good. And that's what excites me about the next 3 to 5 years.
It excites me just to have this conversation. I'm going to have you back because we've learned a lot in this little bit of time. So, are there any projects or opportunities that you're now looking at that you want to share with the audience?
Yeah, I'm working right now on how do we find a way of getting smaller banks, especially minority-owned banks, to start learning about more products and more services. One of the things I also do is trying to get our founders. We invest in about 90% diverse and female-led founders, and I love to find stages for them to be able to tell their stories because I think even my story is a non-traditional story.
Hmm.
Um, I'm from Southern California. I'm parents of Mexican immigrants. My dad was a carpenter cabinet maker. My mom was a bookkeeper. The most complex financial product that we had was a CD. And I always love to tell people if I can do this, anyone can do this. And just takes being, getting yourself out there, telling your story. The power of just telling your story is just really to get more of us out there to say, hey, if he could do that and Donna can do that, I could do a podcast. I can go build a fintech. I can start investing. And that's really for me, like what gets me out of bed is let's get the stories out there so that others who are in the swirl can find podcasts like this, can find the Adrian Mendoza, can find a Donna, can find all these incredible founders and say, hey, I can do that too.
That is exciting. Shaping tomorrow together. So thank you so much. How can we reach you? How can the audience reach out and touch you? Do you prefer LinkedIn or anything specific?
I'm a big LinkedIn fan. I'm always posting there, so feel free to find me on Adrian Mendoza on LinkedIn. I'll be the one at Mendoza Ventures, even though there's a lot of Adrian Mendozas out there. Or just reach out to us on our website at mendoza-ventures.com.
Well, I'd like to thank you for being on Pivoting to Web3 podcast. And to everyone else, good morning, good afternoon, good evening. Thank you for letting us share. Thank you for letting us serve you. And we're shaping tomorrow together. Until next time, be safe. Thanks for checking in the Pivoting to Web3 podcast. Go to pivotingtoweb3podcast.com to download and listen, or Web3 Game Plan to check out the videos. Thank you. We're shaping tomorrow together.